Good afternoon. This is Russ Murfitt, a financial advisor with US Investors. You probably know me because you've been sent this email or you've been invited to attend a YouTube session. I wanted to provide some more information and backdrop to what's happening with taxes. As you know, I sent out a video a couple of weeks ago about filing your taxes. Today, we're going to talk about some upcoming tax changes. And then I'll do another video later on about the implications for you of the Secure Act and how it could impact you. But today I want to talk about potential changes to the upcoming tax changes as a result of the changes being put forth by the Biden administration. So welcome to our workshop. We'd like to talk about the tax law changes that President Biden proposed during his presidential campaign and what they could mean for you. Our goal is to help make the path toward your financial goals tax efficient, so you need to be aware of any potential tax law changes. This is meant to be non-political and just to provide some discussion points and is intended for informational purposes only. Before I begin, I find it's always helpful to review that there are 5 key areas of financial planning. They are preservation planning, retirement planning, tax planning, estate planning, and investment planning. Even though today's presentation is focused on tax planning, as a comprehensive wealth management firm, we try to always consider the impact of any recommendation we make on not just one, but all these areas for our clients. And you will see some of these issues with the taxes will certainly spill over to your investment planning and estate planning. During his campaign, the 46th President of the United States, Joe Biden, released a proposed tax plan with a key focus on higher taxes for the wealthy and higher taxes for corporations. While these proposals are not yet law, it still could be helpful to be aware of them so if they are considered, you can be better prepared for them. This workshop will look at those proposed changes. President Biden proposed increasing corporate tax rates. Under the Tax Cuts and Jobs Act, the peak marginal corporate tax rate was reduced from 35% to 21%. Under the Biden tax plan, the corporate tax rate would be increased to 28%. Also proposed is an increase in the marginal tax rate for top earners, which were defined as individuals making over $400,000 a year. Biden's tax plan would raise the top marginal income tax bracket from 37% to 39.6%. The Tax Cuts and Jobs Act had lowered the top marginal bracket from 39% to 37% in 2018. The proposal was non-specific, but here's a visual of what married filing jointly tax brackets might look like if this were to happen. And you can see that the rates maxed out at 37%, and now at the same income where you were paying 35%, you'll now be at 39.6%. Biden's proposal calls for lifting the capital gains and dividend tax rates on filers with incomes above $1 million in income to pay ordinary tax rates on their dividends and capital gains, no matter how long they've been held as an asset. This would imply that large earners or large gains could see those rates, usually tax advantaged, rise up to 39.6%. Here's a visual of what capital gains tax rates look like when this happens. Instead of 3 rates, there would be 4, where there were 15% and 20%, and then of course below a certain threshold there's no capital gains tax. Now there would be 15 and 20, and then anything above $1 million would be taxed at 39.6%. Biden's tax plan includes a cap on itemized deductions of 28% for those with earnings more than $400,000 once again. This means for each dollar of itemized tax deductions, including charitable contributions, a taxpayer or couple filing jointly would only receive a maximum benefit of 28 cents on the dollar. This 28% limit would hold true even if a filer is paying a higher marginal tax rate. For example, if this were enacted and you have $40,000 of deductions, then even in the highest brackets, you would only save 28%, or in this example, $11,200. Biden's tax plan would phase out small business income deductions for taxable incomes over $400,000. This one's a complicated piece of legislation, and his proposal did not share many details, but still we wanted to acknowledge that it's a possibility. One of the tax programs that could affect most people is eliminating the step-up in basis. What that means is that step-up basis is a tax law that applies to estate transfers. When someone inherits investment assets, the IRS resets the asset's original cost basis to its value at the date of the inheritance. The heir then pays capital gains taxes on that basis. For example, if you invested $300,000 in marketable securities that are now worth $500,000, at the time of your death, the heir would pay capital gains on anything over $500,000 when the position was sold. This is because you receive a stepped-up basis. If Biden's tax proposal were to become law, heirs would not inherit a stepped-up cost basis, and if they liquidated the position soon after receiving it, would realize $200,000 of capital gains if they sold that $300,000 position for $500,000. From my personal experience, this could impact many of my clients when they inherit assets from their parents. One of Biden's more talked about tax plan changes is to significantly reduce estate tax exemptions from the current $11.7 million per individual back down to $3.5 million per individual, effective immediately. This means estates over that value would be subject to estate tax. This is something those who have larger estates should be very aware of. Albert Einstein said the hardest thing to understand in the world is the income tax. Will Rogers said the difference between death and taxes is death doesn't get worse every time Congress meets. Biden's proposed plan could change tax laws with a focus on taxing corporations and high-income earners. With both a Democratic House and Senate, Biden's proposed changes need to be watched carefully. As of now, tax change moves were not expected immediately, as the new administration has initially focused on getting the pandemic under control. We're keeping a watchful eye on any changes that could affect your situation, and we believe that taking a proactive approach is better than a reactive approach, especially regarding income taxes. If you have any questions, please give us a call. So what can you expect from us? You can expect regular communication, more frequent discussions, and you can expect that we're continually reviewing economic, tax, estate, and investment issues for our clients. Thank you for your time today. Remember, your health and well-being is our highest priority. We appreciate the opportunity to assist you with your financial needs. If anyone that you appreciate and think highly of would benefit from this information, I'd be honored to provide that information to them if you just let me know. So once again, appreciate your time and thank you for participating in the workshop, and I look forward to talking with you soon.